We're going to get into big tech with our next guest, but let's start with Tesla. Shares shot up by 27% last week and wiped out losses for all of 2024. Our next guest, though, said in a recent note that he expects Tesla to face many of the same challenges next year that it's facing right now, and just with more competition. Joining us right now is Toni Sacconaghi. He is Bernstein's senior research analyst. He actually rates Tesla underperform with a $120 per share price target. Tony, I'm looking at it. Tesla is almost at 150 or 250. That is so far above your price target. What do you do at this point?
Good morning, Becky. Look, Tesla's had a great run, as you mentioned, up, I think, 25% in the last week, almost 40% in the last couple of weeks. It's clearly riding momentum of better than feared results, but this is a company whose deliveries were down 5% this quarter. They were down 9% last quarter. It's trading at 125 times earnings. There's anticipation that things may get a little better, but they're still not good. And there's anticipation about a robo-taxi event in early August. And so we could continue to see some momentum in the stock, but this is meme-like, quite frankly. The valuation is disconnected from the fundamentals. The company was supposed to earn $7 in earnings this year. Consensus estimates are now $2, and the stock price is really not that different. And it's really about enthusiasm that things may get better and that Tesla may say something really exciting at its robo-taxi announcement. But at the end of the day, stocks get measured on cash flows and future cash flows. And we just see a disconnect between what that earnings and cash flow power is and the company's current share price.
Tony, I hear your point, but that is the same argument that the shorts have been making against Tesla for a very, very long time, to their great dismay. I just wonder, do you keep your $120 price target, or is there a point where you have to say, okay, forget it, we're back to earlier valuations of Tesla, and I'm not going to stick to it, or do you?
Well, look, I mean, of course, any investor has to be open-minded about what a company may or may not do. And so if we did see a path where Tesla could be a leader in autonomous vehicles, or Tesla could build a very sizable business of building humanoid robots, of course, we would have to adjust our outlook and our future estimates and accordingly our price target. But at this point, we don't see that. We believe that autonomy is a ways out, and we don't believe that Tesla will uniquely solve that problem. Waymo has been working at this. They've been doing trials since 2012 on self-driving. Tesla has not done any public trials. Not to say that Tesla won't do well in full self-driving. It's just not something that it necessarily will be able to exclusively do. And you have to almost believe that to get to the types of valuations that Tesla stock is currently trading at.
All right, let's shift gears and talk about Apple. We just heard, I'm guessing you heard the report that we just went through about what the EU is doing, focusing on some of these big companies, and Apple in particular. Does it worry you about the EU's influence on this? What do you think of the big run that we've seen in Apple shares over the last several months? And I should point out, you were right on that. You did have an upgrade in late April when the stock was at 170. It's now at 227. So what do you think happens from here?
Yeah, so look, regulation has been a threat to Apple for the last several years, both in the U.S. and in Europe. The DMA ruling is really around the App Store. The App Store in Europe is less than 0.5% of Apple's total revenues. And so even if regulation did force Apple to make concessions and that business was compromised, it's pretty immaterial. But I do think Apple has a very strong consumer value proposition. Becky, I think you were talking about that earlier. Consumers enjoy the App Store. It's easy to use. Apple make sure every app is approved and there's no pornography or anything else that's inappropriate in the App Store. And so I do think Apple does a really good job, and ultimately Any legislation is not likely to either be material in terms of the size of that business, and I think it's going to take a long time to play out. I think in terms of the stock, investor sentiment has shifted. Apple was perceived potentially as being a laggard in AI. I think the belief now is Apple can be a leader in AI. We think earnings next year could be close to $8. At 30 or 32 times, you see a stock price at 240 or 250. We certainly think that's achievable.